Hello and welcome to Business Point on Global Television. We are live in the nation's capital, Abuja. I am Queen Agaba. And on Business Point, we x-ray Nigeria's economy. We talk about government policies, tech, as well as innovation. And recently, we're talking about, it's been a topic making headlines, the Nigerian banking sector and the recapitalization of banks. You know, the Nigerian banking sector has faced multiple challenges over the years, with significant troubles peaking during the global financial crisis of 2008 to 2009. This period was particularly tumultuous for Nigeria's financial system, characterized by high levels of non-performing loans, poor corporate governance, mismanagement, and excessive risk-taking among banks. Now let's look at a brief overview of the historical challenges, particularly focusing on the crisis around 2009. Pre-2009 build-up prior to the crisis, many Nigerian banks engaged in aggressive growth strategies that involved high-risk lending, often linked to the capital markets in oil sectors. The bank benefited from an economic boom, particularly in oil revenues, which encouraged speculative lending and investments. Also, there was a significant expansion in consumer credit, real estate, and stock market investment financed by the banks. Now, to the crisis, the financial crisis. The global financial downturn triggered a sharp fall in oil prices and a stock market collapse in Nigeria. As a result, the asset quality of Nigerian banks deteriorated rapidly due to exposure to the oil sector and margin loans to investors in the stock market. By mid-2009, it was clear that several banks were in distress. Non-performing loans soared, reaching more than 30% of total loans from some banks, far above the regulatory maximum of 5%. Capital adequacy ratios fell to below the regulatory minimum, signaling a severe erosion of the capital base necessary to absorb losses. Talk about liquidity constraints. It became prevalent as interbank lending froze and customer withdrawals escalated. Government and Central Bank of Nigeria intervention in response to this crisis, they intervened, led by the then Governor Sanusi Lamido Sanusi, who took decisive steps. Now we want to talk about these decisive steps briefly. Audit assessment. The CBN conducted a special audit for all banks in Nigeria, revealing significant insolvency issues among several major banks. They also had bailout and recapitalization. Here we go again. The CBN injected 620 billion naira, about $4 billion USD at the time, into the 8 most troubled banks. This capital injection was crucial in preventing a total collapse of not only the banks, but potentially the wider Nigerian economy. We had management changes. The CBN dismissed the executives of the 8 banks that received bailouts, citing mismanagement and corruption, and installed new management to restore confidence and order. And then we had the establishment of APCON in 2010. The Asset Management Corporation of Nigeria was established to buy up non-performing loans and to facilitate the recapitalization of distressed banks. Post-crisis reforms. Following the crisis, several reforms were introduced to strengthen the banking sector and prevent a recurrence. We can go on and on talking about strengthening regulations and supervision, improving corporate governance, and financial stability framework and all that. My guest on the program discussing bank recapitalization now and the role of Securities and Exchange Commission is Ogaga Aremu, a business journalist, who will help us explore critical issues surrounding bank recapitalization and the role of SEC in Nigeria, and better give us insights into how these factors influence Nigeria's economic landscape. We'll be right back after this break. Please stay with us. Many thanks for staying with us. Now, if you've just joined us, this is Business Point on Global Television, where we x-ray Nigeria's economy, talk about government policy, tech, and innovation. I am Queen Agaba. And before the break, I'd introduced my guest, Ogaga Aremu, who would be helping us make better sense of the bank's recapitalization. But while we're trying to connect with him, let me take you through some of the crises that were significant in 2009 that resorted to a need for recapitalization of bank. In 2009, we had financial crisis. The global financial downturn triggered a sharp fall in oil prices and a stock market collapse in Nigeria. As a result, like I earlier put it, the asset quality of Nigerian banks deteriorated rapidly due to exposure to the oil sector and margin loans to investors in the stock market. Also, non-performing loans soared, reaching more than 30% of total loans for some banks, far above the regulatory maximum of 5%. Capital adequacy ratios fell below the regulatory minimum, signaling a severe erosion of the capital base necessary to absorb losses. We had liquidity constraints. They became prevalent as interbank lending froze and customer withdrawals escalated. Government and Central Bank of Nigeria intervened in response to these crises. They led when the central bank was led by the then governor Sanusi Lamido Sanusi, who took decisive steps. What are these decisive steps? Like I earlier put out, we had audit and assessment, we had bailout and recapitalization, which we are now seeing again. At that bailout and recapitalization phase, we had the CBN inject $620 billion, about 620 billion naira, I beg your pardon, which is about $4 billion at the time, into the 8th most troubled bank. This capital injection was crucial in preventing a total collapse of not only the banks, but potentially the wider Nigerian economy. We also had the establishment of AMCON in 2010. AMCON, which is the Asset Management Corporation of Nigeria, it was established to buy up non-performing loans and to facilitate the recapitalization of the distressed banks. Also, we had post-crisis reforms following the crisis. Several reforms were introduced to strengthen the banking sector and prevent a reoccurrence. Now, there were also measures to strengthen regulation and supervision. Enhanced regulatory measures were put in place, including stricter capital and liquidity requirements. Improving corporate governance, new guidelines were issued to promote transparency, accountability, and risk management in the banking sector. There were also financial stability framework efforts were made, particularly to establish a more robust financial stability framework capable of monitoring systematic risks. The intervention and reforms post-2009 helped stabilize and gradually restore confidence in Nigeria's banking sector. These measures also set the stage for future regulatory policies aimed at creating a more resilient banking environment in Nigeria. I'm aware, I'm now joined by Ogaga Aremu, who is a business journalist. And like I said earlier, he would help us explore critical issues surrounding bank recapitalization and the role of SEC in Nigeria, and also make us better, give us better insights as to how these factors can influence Nigeria's landscape. Many thanks for joining me on the program, Ogaga. Can you hear me? Many thanks for joining me. Good morning. Ogaga, are you there? Okay, we're just going to take a quick break, and when we return, hopefully we get connected with our guest. Please stay with us. We'll be right back. Many thanks for staying with us. We apologize for that long break. And if you've just joined us, this is Business Point on Global Television, where we x-ray Nigeria's economy, talk about tech, government policies, as well as innovation. Good morning, Mr. Ogaga. Can you hear me?
I can hear you. Can you hear me?
Yes, I can hear you. Good morning. Now, I
Yeah.
just established, the historical challenges Nigerian banks have faced, as particularly the 2009 financial crisis, when several banks were bailed out due to, solvency issues and a lot of things, a lot of structures had to be put in place. Now, I just want you to establish, because I want us to, you to make it better make sense for us, the recapitalization and, how these factors can influence Nigeria's economic landscape. But first of all, can you explain what, bank recapitalization is and why it is important in the context of Nigeria's banking sector?
All right. Okay. Good morning. So basically, one of the one of the uh, policies of the government is to ensure that the economic actually runs smoothly and we're better off for all Nigerians. So basically, for what the CBN required of a bank right now, it just is a norm across global economics in the sense that with the global economic undertones and all that. So you agree with me that it's not just Nigeria that is facing a lot of economic challenges. It's a global effect. Globally, world economics are actually also facing a lot of issues. So I think one of the reason why CBN actually had to step in to raise the bank capitalization is just to ensure that the country is in line with global best practices in terms of meeting up with all the numerous challenges that the country's economy is facing. You recall that in the space of June and this year, the country's currency was devalued twice, one in June and another in January this year. So, based on the fact that this has been done, it's the banking sector the importance of the banking sector cannot be overemphasized. The banking sector plays a significant role in our country's economy to drive the country's economic. So, the President Buhari, Bola Ahmed Tinubu's government said that we are aiming towards 1 trillion economy by 2027. So I think this is one of the steps to actualize that. That is banks recapitalization is a step to actualize these economic target for the country. So I think it's a good thing for the bank, although right now you discover that most banks are actually recording loss. Just on Friday here, the all share index actually reduced. Banks and different players within the Nigeria Stock Exchange actually lost close to 2.6% in terms of their inflows and all that. So, bank actually coming up with a lot of innovative ideas to ensure that they restock their system in order for them to meet up with the requirements given by CBN. So from now till 2020, 2020, I think in next 2 years, it's expected that all the banks actualize this new capital benchmark. So it's a good thing. It's a good thing for the economy. It's also a good thing for the banking sector. Uh, every society actually desires growth. I'm sure that this is a growth that is significant for every one of us in the country. And since the banking sector plays a significant role, so I'm sure that with this move, you will see that some banks just recently, First Bank actually changed its MD after 9 years of of serving the bank. So I'm sure a lot of banks will come up with innovations to ensure that they meet up with this new benchmark.
Now, following the Central Bank of Nigeria's recent policies, the directives regarding minimum capital requirements and all of that, what are these recent developments in bank recapitalization? How are banks responding to these changes? I know you just mentioned that, banks are putting in a lot of efforts to ensure that, they are able to meet up with this, like Zenith Bank and all that. But how about other banks? How are they responding to these changes?
Okay, so I think they are responding well. First, there's what we call these fugos. These first generation, these banks that actually, in terms of their per capita income, is close to 1 trillion within the Nigeria Stock Exchange. Most of those banks, banks like Zenith Bank, banks like UBA, banks like GTB, bank like Access Bank. Those banks, I don't think those banks will have issues with raising up raising up their per capita income. In fact, most banks that have that have that have their branches internationally, I don't think they have issues raising the fund. So basically, the banks that should have issues are banks who are like tier 2 banks like FCMB, like Wema banks. There are some banks who currently are maybe having challenges trying to put together, but generally, within CBN statistics, CBN actually made us understand that for now, bank has the required liquidity to meet up with these current per capita income requirements. So currently the banking sector is liquidified, so I don't think there's any cause for alarm.
Okay, let's just take a quick break. We'll be right back to continue the conversation. Please stay with us.
All right.
Many thanks for staying with us. We're still on with Ogaga Aremu, who is a business journalist. Before the break, he has been establishing the, the response and, the following the Central Bank of Nigeria's recent policies and directives regarding minimum capital requirement. I want to ask you, Ogaga, what are the implications of not meeting these capital requirements for banks and their customers? Can we look at potential scenarios like mergers, acquisitions, or failures?
Okay, yeah. So yeah, I think that is the potential. In fact, if you read through the policy template that was announced from I think early this month by CBN, you discover that CBN also stated in the template that banks who are unable to meet up with the requirements are advised to look towards measures. So I think, but experts within the sectors have actually come up with some divergent opinions about the impact. That is, banks who are not having same orientation or mindset in terms of operations or philosophy in terms of operation may be forced to, seek for measure with another bank who is having a whole lot of philosophy in terms of operation. So I think those are the possible impacts that we may be looking towards seeing. But in terms of the depositors fund, which is the major concern of most Nigerians, is uh, NDIC, CBN has assured Nigerians that definitely your money, in which of either banks are actually safe and secured. So I think that enough should be the saving grace or something that should serve as an encouragement to everyone abroad, because in all of this, what we Nigerians are actually interested in is the fact that our money is safe and secure. So that is what NDIC and CBN has assured us. So, but apart from that, you will see some banks actually looking towards measure, just as we had during the time of 2018, 2008, when banks like Oceanic Bank had to, metamorphose into what we know today as Eco Bank. So it's things like that are expected to come. It's even stated on CBN's policy guideline that those banks who are unable to meet up with the requirement. The requirement is something that is huge, but I'm sure due to also the data that was provided by CBN in terms of the strength of the banking sector, it shows that there's no cause for alarm. So I'm sure that they should be able to manage themselves. And if merger is coming, we are hoping for mergers with smaller banks, like just as I've earlier highlighted, banks like Wema Bank, Unity Bank. Those smaller banks are perhaps we want to look towards merger. But the issue is, just as we had in 2005 and 2008, the issue with you now see, unlike or strange bedfellows, trying to mesh together to form a bank and all that, those kind of stuff, you see that at the end of the day, it has a ripple effect on the banking sector. So I think that is those are some of the perhaps the negative impacts that we may see or effects that we may see going forward. But in the long run, this just as I've said earlier, the sector is still quite strong and solid. So we are hoping you agree with me that is not this. For instance, GTB Uganda had to be declassified. That is, their licensing category has to be taken to another category, following the fact that they were unable to meet up with the requirements, the minimum capital requirements. So definitely banks who are unable to meet up, is either their licenses being declassified to a category that they their fund could carry, or their capital could carry, or they seek for measure. I think that is what we should expect. Another school of thought by, I think, National Association of Banking and Insurance Workers actually raised an observation that we may see downsizing in terms of workforce when there's merger, because which was the situation in 2005. So that is also an observation that we have to put into consideration. I think I did one report also highlighted that job loss actually looms following bank recapitalizations, because definitely when the two banks have a merger, you cannot replicate a task force. Rather, you cannot duplicate task force. Rather, you just have to do away with one another. So I think those are some of the challenges we may have. Challenges in terms of job cuts, and also challenges in terms of bank finding themselves in a situation whereby they have to merge with other banks that does not have the same philosophy or different philosophy and all that. So those are the kind of challenge, but we have passed that stage before, so I am sure we also passed this very phase going forward.
So we're hopeful that this recapitalization, like it has done in the past, would stabilize the banking sector. Now let's talk about the SEC, the Securities and Exchange Commission's responsibilities. We understand that the SEC's responsibilities is to regulate the securities market, protect investors, and ensure fair and efficient markets. Can you explain the primary role, of the SEC in Nigeria?
Okay, so basically, SEC, just as CBN is responsible for the financial sector, the SEC is responsible for the security and exchange sector. What we refer to as security and exchange sector here, you're talking about stocks, your exchange market, commodity markets, So it is a SEC that is having the regulatory body that should, ensure that sanity of businesses. Nigerians are not being, duped by fake schemes, so many other things that are within that framework. So the responsibility of the SEC, just for instance, now we have a recent issue of Binance. Binance is a company that doesn't have any restriction within the framework of Nigeria, but is a securities/exchange entity. So ordinarily, it is a regulatory body like SEC that should say, okay, this company is deemed fit to operate within the sector, or those players or those operators within the sector operate within the ambits of the law, and also operate in a manner that are not detrimental to the totality of the system. That is, Nigerians are not shortchanged by organizations, companies, who are not genuine, who are not legit. That is the basic responsibility. So it is expected that SEC going forward. Recently, President Tinubu actually approved the board change of SEC. So what the mantle to the new leadership is to ensure that the sector is being sanitized. Nigerians are not being shortchanged. Nigerians are not being scammed by Ponzi schemes and fake or illegitimate companies or investments that just come and cut away with Nigerians' money in the name of firms or companies. So I think this is a charge to the new management or the new board of SEC to be more forthright in their responsibility, because so many things are out there. They are out there. Even recently, there's a new initiative that came up under what we refer to as the crypto. I think it's BITGIT. There are so many things. There are so many initiatives out there in the public that may be injurious to the commonwealth of the public. Are you getting it? So I'm sure that they should step up their. Just recently there was a South African billionaire that was that had to commit suicide following the fact that the Security and Exchange Commission found him wanting in a particular dealing. He was unable to file appropriately its financial record. So at the end of the day, when he was at the verge of being arrested, he committed suicide. So if our regulatory body can step up, it's not just SEC. We have CBN also there regulating the financial sector. We have NEC regulating the electricity sector. All these are regulators, even NCC, the telecommunication sectors, just as it is expected of them, or the mandate that has been placed upon them to regulate the sector. Nigerians expect every one of them to actually play their role optimally and ensure that the sector is being sanitized from fraudsters.
Now, let's look at the challenges that SEC might face. What are the challenges the SEC faces in regulating the capital markets, talking about market manipulation, insider trading, or even lack of market depth?
Okay, so I think there's always a need for collaboration. The SEC can always collaborate with anti-corruption agencies like EFCC and ICPC to ensure that the sector is being sanitized. Just recently, EFCC announced that they are clamping down on cryptocurrency and other platforms manipulating our currency. So I think it is the duty of the government, it is the duty of this regulatory body, whether you are a regulatory body or you're not, it is the duty of all agencies of government to ensure that the sector is not and Nigeria currency is not being manipulated, and also the economy actually be on the right track in terms of growth. So it's actually beyond projection. We will know. We should be more practically inclined in terms of what we should do to put the country back on track. So imagine the rate of inflation that is actually taking on Nigerians in terms of the hiking in prices of food. So you're having multi-dimensional challenges everywhere. So Nigeria is having so much challenge to now start thinking about challenges on their funds, their bonds, their security out there in the bank, their money out there in the bank. So I think the regulatory body needs to step up their role, their responsibility in terms of sanitizing the sector. That is the only solution. And I'm sure if they can do their responsibility very well as empowered by the law and the law that established the institution, I'm sure things will be on the right track.
And so far, I want us to look at examples or significant actions that the Securities and Exchange Commissions have taken recently to enhance market transparency and investors' confidence. I'm referring to enforcement actions, policy changes, initiatives, or to enhance disclosure and compliance. Since we're talking about the role of SEC.
Okay, so recently, I think in January 29th, the CBN in conjunction with the SEC issued a directive to to companies that are listed in the Nigeria Stock Exchange to be more transparent first in terms of their stock reporting. So I think issues like that is something that should be encouraged and more often should be done, compared to being done in a rare occasion. So I'm sure if the regulatory body like SEC, as we have said, always be on the toes of the players, I'm sure that the sector will be on a positive side, just as they have done recently in terms of issuing a notice to operators to be more fair in terms or more transparent in terms of their reportage. Reportage of their financial statements, their daily records and all that. So I think with more searchlight in terms of the regulatory bodies, if they be more searchlight on these operators listed in the Nigeria Stock Exchange, I'm sure that things will be better off, and Nigerians who are currently within the exchange markets will continue to smile back home in terms of their the, the profits that is being yielded to them from their dividend.
Just before I ask you the last question, let me ask you, this question. I'd wanted us to, move into talking about crude oil prices, but I hope that you grace our platform again. This is because, we're restricted by time. Let's talk about the biggest upcoming trends or changes expected in Nigeria's financial regulatory landscape. This could include, like, I'm talking about anticipated regulatory reforms, changes in international financial reporting standards, or upcoming government fiscal policies impacting finances.
Okay, so basically for now, you discover that in the first quarter of this year, that is from January to March, the Central Bank of Nigeria actually come up with a lot of monetary policies, and also the Minister of Finance have also showed the required appetite to also collaborate with other sector. And what I'm actually thinking that should be done is more collaboration among the fiscal agencies like the Ministry of Finance, Ministry of Trade and Investments, and also most importantly, Ministry of Agric and Transport is very important because food prices are actually, there's no way you can tackle food prices if you don't have the required policies in place. So beyond monetary policies that have been put in place by CBN to ensure that the sector strive, I'm appealing to the federal government, the Minister of Finance, that is Wale Edun, to also up his antics in terms of coming up with viable policies that will indeed also impact in the life of Nigerians. For instance, I think they say they are going to roll out CNG buses before May 29, which is also a very good initiative, because when you check the basket of inflation, you discover that transport fare is one of those things that contributes to the rise in the prices of food and other commodities. So if we can check the price of transportation by the rollout of CNG buses, which perhaps, according to the government, said is cheaper, is less expensive, and also more more uh, uh, more is better up in terms of usability. So if that is being done, so if that is being done, I'm sure that you see things start coming back alive within this second quarter that we have entered from April. So with the policies, if we just hope that some of these policies are translated into things that practically impact positively on the lives of Nigerians. So it's one thing for the government to come up with policy. It's another thing for it to be set in the life of Nigerians. So I think that is the concern of every one of us. Whatever that is being done should be positively impacting the life of Nigeria, not negatively impacting the life of Nigeria.
I think you've basically almost answered the last question I was going to ask you. But in 1 minute, let us know what should be the priorities for Nigerian regulators to ensure a robust financial sector that can withstand economic shocks. Let's have insight on, like you rightly mentioned just now, policy reforms, you know, the CNG buses, collaborations and all that. Can we talk about enhanced supervisory mechanisms or even innovative financial products?
Yeah, you've actually also emphasized on that. Uh, like like I have said earlier, there should be more collaboration, ministerial collaboration to ensure that some of these policies that have been rolled out are properly and adequately implemented to the extent that it will impact on the lives of Nigerians. For instance, we are about approaching the farming, the harvest period. The rainy period is actually is coming handy. It is now, you know, people who are into the business of agri will want to purchase a lot of things like fertilizer, that may impact in their crop production. So if government can come up with initiative like that, now that we're about to enter the planting season, so if government can come up with initiative that will bring more fertilizer to the farmers, at the end of the day, the
Yeah,
prices of
will
good
come
and
down.
services will actually come down in
Yeah,
the
will
next
come
quarter.
down. Rightly said. Many thanks, Mr. Ogaga. Thank you. Your concerns clearly articulated, and you've made us better make sense of bank recapitalization. We hope that you grace our platform again.
Yeah, thank you so much.
Thank you, and have a
Definitely.
beautiful day ahead. This is where we
All
draw the
right.
curtains on Business Points. Many thanks for staying with us. Don't forget to follow us on all our social media handles now showing on the screen. I am Queen Agaba. Thank you for watching and see you again.